Frequently asked questions. 1031 exchanges of vacation homes. A commonly asked question is, does a vacation home qualify for a 1031 exchange? And let me kind of provide two different answers to that. First off, if a property that's in a vacation area, a resort destination, if that property is used exclusively as a second home, it's not rented, there are no attempts to rent it, it's strictly a second home, that type of property is excluded from 1031 tax deferral. It does not qualify as a relinquished property in an exchange, nor does it qualify as a replacement property in an exchange. However, we got guidance from the IRS back in 2008, and this is under the form of Revenue Procedure 2008-16. And the IRS provided guidance and said if a taxpayer's property in a vacation or resort area meets these parameters, it does create a safe harbor for a 1031 exchange of a vacation home. Specifically, the IRS will consider that property, what they refer to as a dwelling unit, as held for investment if certain requirements are met. So let me go over those requirements and then flesh them out in a little more detail. The requirements are fairly straightforward. For a 2-year period of time, the taxpayer must hold the property, and within each of those years, the taxpayer must rent the property for at least 2 weeks at fair market rent. And then finally, the taxpayer's personal use of that property or dwelling unit cannot exceed the greater of 2 weeks or 10% of the time it's rented. So let me kind of review that again and flesh these out. I kind of call this the rule of twos. For a 2-year period of time, a minimum of 2 weeks of rental income each of those years, and no more than 2 weeks of personal use or 10% of the time it's rented. Please note that the taxpayer is allowed to rent the property to family members as long as they pay fair market rent. And then on the last restriction, the taxpayer can't use it more than 2 weeks or 10% of the time it's rented. So let's just say that a taxpayer had rented a property for 10 months. They would be eligible for more than the 2 weeks because they could go up to the 10% of the time it's rented. So this creates a safe harbor, and a safe harbor simply means as long as the taxpayer stays within these parameters, the IRS won't challenge this, and this will be considered a property that is held for investment purposes in a 1031 exchange. To review your specific 1031 exchange situation, contact Asset Preservation's headquarters in California at 800-282-1031 or our Eastern Regional Office in New York at 866-394-1031. Please read the full disclaimer, as Asset Preservation cannot provide tax or legal advice.